Flashy taglines, supposed irresistible offers, limitless possibilities. See, the dreams credit card companies sell to us are nothing short of amazing. But do you know that 3 in every 5 Americans are actually neck deep in credit card debt? Hell no. This means the chances of you and I being in debt as you watch this video are insanely high. Now, have you also been asking yourself how your credit bill got this high? Well, welcome to the club. Listen, from its original format as a cardboard Diners Club card all the way down to the metal chip-embedded card we have in our pockets today, the fundamental scope behind credit cards has remained the same. It's a method that allows you to buy now and pay later, either at a cost or for free. Sadly, over the years, this supposedly enticing payment structure has helped millions of Americans race down the rabbit hole of debt. I think it's safe to say credit cards have gradually metamorphosed into an instrument for modern slavery. Walk with me for a second. The history of credit cards in America dates back to the late 1800s when stores started issuing loyalty cards. As the name implies, they were meant for loyal customers, allowing them to buy from the stores and pay later. I mean, I shouldn't just be loyal for free, yeah? While loyalty cards are still a thing today, they gradually phased off in the early 1900s when Western Union introduced metal money, which technically became one of the first consumer credit cards globally. Metal money allows customers to defer their payments following the loyalty card concept. With time, more and more iterations emerged, from lines of credit by hotel chains and oil companies to the Chaga plate in 1930s, which allowed customers to buy things on credit in exchange for their personal data, such as their names, where they live, and so on. One of the noteworthy iterations that sparked much innovation in the credit card industry is the Diners Club card. The Diners Club card was proposed as a solution that could help Americans avoid being stranded without funds, as the creator, Frank McNamara, described it. Let's call this the first modern credit card because its success opened the door for several large financial institutions and other similar companies to venture into this scheme, which, of course, eventually turned into a money-making venture. To put things into context, the Diners Club card recorded over 42,000 users within its first 12 months of existence, and back then, those are pretty good numbers. First, American Express created its charge cards in 1958. Then, Bank of America followed suit not long after. Visa, MasterCard, Chase, Capital One, Wells Fargo, to mention a few, they all joined the fast-moving train. So the big question is, if truly the credit card was designed to help Americans get closer to their dreams and prevent them from being stranded when they needed cash, why are more and more financial institutions coming up with their own credit cards? Today, an average American has about 5 credit cards to themselves, with an average of $5,500 in credit. So why is it becoming increasingly popular year over year? What exactly is the psychology behind credit cards, and why does it continue to leave millions of Americans in unimaginable debt? We can call this the dark side of credit cards. First, let's see how these guys make their money. Yeah, I'm pretty sure it's no longer news that credit card facilities make money off of these debts. I mean, it's a no-brainer, yeah? But how do they do it? To see things from a better perspective, you just need to see these guys as loan sharks. I mean, are they really any different? Okay, maybe with a different lingo, you aren't borrowing money from them. Instead, you're buying with their money to pay later at an incredibly high interest rate, and maybe later, a late penalty that almost all Americans fall victim to. Let's first talk about this interest rate. How exactly did we get here? To be honest, there was interest at first, but they were incredibly low, marked at about 4 to 5%. And this drove massive adoption. But if this had continued, how exactly would the capitalist system survive? So yes, they had to devise a way of making money off the scheme, and voila, higher interests. The modest revenue wasn't enough, which explains why today credit card interest is an average high of 22.63%, according to a recent CNN article. The pioneers of credit cards lost a lot of money when they first started, thanks to many factors, including limited access to customer information, and, more importantly, it was ridiculously easy to get a credit card back then. I mean, you basically just needed to apply, and that's all there was to it. However, while these guys lost a lot of money, the bright side was that they were able to cover a huge customer base, which served as their catapult to conquering the entire America, well, maybe the world. At the time, almost all the states had various laws and regulations preventing credit card companies from raising their interest rates. This continued for as long as possible until one of the states made a U-turn, eliminating its cap on interest rates and providing the crack needed to shoot things to the moon. And as the crack continued to widen, more and more states also removed their caps, and it all blew up when the US Supreme Court passed the decision that allowed banks to export their interest rates to other states. What this essentially meant was that regardless of the state cap on interest rates, banks were free to use a uniform rate across all of the states. So, for example, if Bank of America was charging 30% in Los Angeles, it could also charge its customers in Florida the same interest rate regardless of the limits the state of Florida had set.
This thing is a gold mine.
Credit cards flooded the streets as they became even more accessible to almost everyone. Students, underemployed, unemployed, overemployed, families, basically anyone you could think of was offered a credit card. I mean, they now know how to make their money, so why hoard the cards from those who would make the money for them? With limitless interest rates, late repayment penalties also set in. This one was really a no-brainer, but it made a significant difference. People never pay as and when due, and even when they want to, their payment deadline might fall on a weekend or a holiday, preventing them from making the payment. See, somehow, some way, something will always happen to prevent the possibility of you paying. But I promise you, it's not voodoo. It's the psychology behind the slavery instrument, credit cards. This brings us to the psychology of credit cards. Why are people more adopting and falling into the rabbit hole? Well, these credit card companies are smarter than we can ever imagine. Returning to history, it all began with students. These guys were not just vulnerable to the gimmicks, they also wanted to enjoy spending without actually dipping their hands into their own pockets. They believed paying back shouldn't be a big deal and they would never miss. But they do, and they do again and again, and maybe even throughout their lifetime. Now, they are adults, and it has become an irredeemable habit. They just keep buying on credit. And the adults at that time? Well, circling back to the start of these videos, did you notice how enticing those advertisements were? Listen, even the stingiest person will most likely fall for those offers. One of the most popular was free interest and zero late repayment fees for the first 12 months. Don't be fooled. These guys aren't looking out for you. They're actually just looking out for their own pockets. So, this is how it works. According to a 2019 article on Healthline on behavioral psychology, it takes approximately 18 to 254 days for a habit to stick. Now, how does this exactly matter? Well, it does. These credit card companies are actually baiting you for 365 days, so your spending habit sticks and going back becomes extremely difficult. They allow you to enjoy buying on credit for a whole 12 months for free, whether or not you have to repay as and when due, or not. So, after the trial period, your first penalty would come as a shock, plus the insanely high interest rate they had been waiting patiently to serve you. And then the next, maybe another next, until you realize there is almost no going back for you. You are trapped in their web for life. And there is also the risk of increasing interest rates too. Your credit card issuer may increase the interest rate of your card for several reasons, which may also affect your outstanding balance. So while you're working your arse out to pay your credit card, they serve you an increased rate, which just continues to increase your debt whilst reducing your chances of completely repaying, which means you're bound to pay late repayment penalties for as long as possible, maybe even for life. And there is a never give up spirit we have as humans too. We feign this as resilience, but in reality it's bordering slavery. We think we can always do it. But in the context of credit card loans, can we actually? Or are we just voluntarily surrendering ourselves to be used as pawns in the who profits more game played by the various credit card companies fighting to win our attention? Students, adults, low-income households, high-income households, the disappearing middle class. Basically, no one is spared, even me. We are all victims of the same circumstance, probably. Or maybe most of us. But you get the point. So how do we get out of this debt? I mean, we now recognize the game plan. They need us to continue buying on credit, enjoying instant gratification since the money isn't leaving our account immediately, while they sit and wait to slam us with criminally high interest rates and late repayment fees. See, there really is no magic. The concept is far more straightforward than how they lure us into the trap. First, you need to see your credit card as a debit card. Saying you should completely avoid credit cards is illogical. I won't want to say impossible. So instead, play the role of the smart slave. Understand that for every transaction you make on your credit card, a far worse impact is landing on your account. So this divides into two main things. One, don't buy what you don't urgently need and can't afford outrightly. And two, if you need it urgently and can't afford it outright, ensure you pay it off within the month. This way, you would undoubtedly enjoy all the benefits of having a credit card without paying a dime to the credit card provider. Talk about playing them at their own game.
Great job!
You need to see credit cards as a knife, and you are a chef. It's an unavoidable tool that you will need, but you would only use it when needed. And after using it, you clean it up, return it to the cabinet to prevent avoidable hazards. In this case, cleaning and returning to the cabinet means repaying all the debts within a month. Remember, in the crust of every marketing strategy is consumer behavior, and these credit card companies study your behavior far more than you study your own behavior yourself. So, it's going to be a hard fight, but trust me, that is all you need to break free from the shackles of this modern slavery disguised as financial aid. Alrighty, that's a wrap for today's video. Thank you for staying this far, but don't forget to like, subscribe, and ring the bell notification so you'll be among the first to know when we publish next. Thanks for tuning in, and I'll catch you on the next one.